Let's take a look at what happened with Tesla today. So the earnings just came out. It is 5:09 p.m. So let's take a look at them right away. Let's start reading. In Q1, we accomplished an industry first, simultaneously changing over production lines across all factories for the world's best-selling vehicle, the Model Y. The Tesla team successfully ramped our production lines across 4 factories while managing supply chains across 3 continents without any major disruptions, demonstrating the advancement of our operational and supply chain management capabilities. Okay, this is all nice, and AI is a major pillar of growth for Tesla and the broader economy and key to our pursuit of sustainable abundance, blah, blah, blah. And then this is interesting. While the current tariff landscape will have a relatively larger impact on our energy business compared to automotive, we are taking actions to stabilize the business in the medium to long term and focus on maintaining its health. Uncertainty in the automotive and energy markets continues to increase as rapidly evolving trade policy, rapidly evolving, that's right, adversely impacts the global supply chain and cost structure of Tesla and our peers. So Tesla is saying here that they are not alone in this. It is costing more to acquire parts. This dynamic, along with changing political sentiment, could have a meaningful impact on demand for our products in the near term. So brace yourselves, this is going down. We remain committed to expanding our business model to include delivering autonomous robots across multiple form factors and use cases, powered by our real-world AI expertise to our customers and for use in our factories as we navigate these headwinds. In the face of near-term profitability hurdles, the low-cost, localized manufacturing base that we have built provides advantages in delivering the best products at the right price to our customers globally. We continue to make critical high-value investments while maintaining a strong balance sheet during this uncertain period. Yeah, it is uncertain for sure. So let's take a look at some numbers. Total automotive revenues. 13 billion compared to 17 billion last year. Still, Q1 is lower than Q4 of the previous year because at the beginning of a new calendar year, less cars are being sold. So we have a 20% decrease year over year. Energy generation and storage revenue, we are up 65% year over year. Sequentially, just a little bit down. Services and other revenues, we are just a little bit higher at 15%. Total revenues, we are at 19 billion compared to 21 billion year over year. And sequentially, we are also down. So 9% down year over year. Gross profit, 15% down. And the GAAP gross margin, we are 1 point, a little bit more than 1 basis point lower. Operating expenses, they are climbing. So, we have less revenue. We have less revenues, but expenses are climbing. So this is not good. Income from operation, wow, this is really low, 400 million. That's 66% lower year over year. Operating margins, 300 basis points lower year over year. And adjusted EBITDA, 70% down. Adjusted EBITDA margin, 14.6%. We had that in Q2 of 2024. So more than 100 basis point lower. And then let's jump to earnings per share. The GAAP and the non-GAAP, 0.12 and 0.27. Look at this. So the non-GAAP, we have a drop of 40% and the GAAP, a drop of 71% earnings per share. This is a big drop. Net cash provided by operating activities, we are at 2 billion, 7 and 91% higher. Capital expenditure, a lot less, 46% less. So the cash flow, the free cash flow has increased by 100%, more than 100%. Cash and cash equivalent investment, we are at 30% higher, at 38% higher. So let's take a look at the explanation here for the revenue. Total revenue decreased 9% year over year to 19.3 billion. Year over year revenue was impacted by the following items. Decline in vehicle deliveries. Yeah, we saw that in part due to the Model Y, update across all 4 vehicle factories. It's not only that, maybe, demand has been impacted too. Reduced vehicle average selling price, negative effects, growth in energy generation and storage. Okay, so this is helping a little bit, and higher regulatory credit revenue. Profitability, our operating income decreased 66%, resulting in a 2.1% operating margin. So this was impacted by reduced vehicle average selling price, decline in vehicle deliveries, increase in operating expenses driven by AI and other R&D projects, partially offset by a decrease in SG&A, growth in energy generation and storage gross profits, lower costs associated with Cybertruck production ramp, lower cost per vehicle, including lower raw material costs, partially offset by lower fixed cost absorption, primarily for Model Y production. Yeah, so lower fixed costs, primarily from Model Y production decrease year over year, and higher regulatory credit revenue. And looking at the numbers, so Model 3 and Y production, 345,000. We have known these numbers, so 16% year over year. Other model, 18% year over year. So this 18% in other models was not because a refurbishing of the factories. The Y, yes, you can say that, but you cannot say that for the Model S and X. Deliveries minus 12%, other models 24% less deliveries. So total deliveries 13% less. This is year over year. Storage deployed, so 10.4 gigawatt hour. So this is pretty impressive. So this is doing well. And supercharger stations and connectors, this is still increasing. So we are starting, if you take a look at this, we are starting to see the lines coming down. And they have been coming down since the peak Q4 2023, but we are continuing to see the effect. It is difficult to measure the impacts of shifting global trade policy on the automotive and energy supply chains, our cost structure, and demand for durable goods and related services. While we are making prudent investments that will set up both our vehicle and energy businesses for growth, the rate of growth this year will depend on a variety of factors, including the rate of acceleration of our autonomy efforts. So I think Elon needs to double down on that autonomy, production ramp at our factories, and the broader macroeconomic environment. We will revisit our 2025 guidance in our Q2 update. Elon, if he has learned something, he needs to be cautious with what he's going to say during the earnings call, because he has sometime been depressed on the call and the stock has tanked. So people are going to look at his reaction also on top of the lower than expected earnings per share and also revenue. We have sufficient liquidity to fund our product roadmap. So this is good. Long-term capacity expansion plans and other expenses. They have enough money to continue with AI. They have enough money to continue with the Optimus robot. But in the meantime, things are not super good. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. So they will be continuing making profit and everything. Plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be produced on the same manufacturing lines as our current vehicle lineup. This could save Tesla. This could, not that Tesla is in a bad position, but this could help out. They are keeping the same lines and they will do a cheaper car. So that might change the game. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. So he has seen this coming, I think, because that new cheaper car was going to be built on a new line, and Tesla has changed, said, no, this is going to be built on an existing line, saving costs. This was the right decision, and this should help us fully utilize our current expected maximum capacity of close to 3 million cars, enabling more than 60% growth over 2024 production before investing in new manufacturing lines. Our purpose-built robotaxi product, Cybercab, will continue to pursue a revolutionary unboxed manufacturing strategy and is scheduled for volume production starting in 2026. Okay, so things are not super good for Q1, but we are seeing some light at the end of the tunnel. And this is a picture of the Tesla diner coming soon. This is a very nice picture. You know, the semi-factory, this is currently being built right now. The Cybertruck, 5-star crash safety rating. Powerwall 3 ramp, 1,500 units in a single shift. Nice. First mega pack of the line in Shanghai. And Fremont pilot production line for Optimus. So, these are the facts. The stock chart is a fact, and these financial numbers are facts also. But these are facts that are indirectly related to the stock chart movement. How are people going to interpret those facts and what will be their behavior? This we can only assess by looking at the stock chart. We can look at the post-market numbers right now. So the post-market are better right now. So we closed at $237.97, up $10.47. That's 4.6% up today. Post-market, we are at $246.50. So that's up $8.53, 3.54%. This is pretty impressive. As I say, the post-market numbers are not always the same as the next day opening numbers because right now, not everybody can buy the stock. And if we take a look at where that will take us, we can assess where things could be going tomorrow. So we have support at 217.65 right here, 217.65. We are above that. The main congestion zone goes up to 291.77. 291.77 right here. This is the congestion zone. We were towards the bottom, towards the support. So we are climbing a little bit higher, 2.9% right now. So this is not changing things materially. If we go on the 1-hour chart, so on the 1-hour chart, we just got outside of our downward channel this afternoon, right here. And then the next resistance, in order to get a buy signal on the 1-hour chart, the next resistance is at 245.68. This is the resistance right here. So right now, so far, we could open tomorrow exactly at that price point. So we could be getting a buy signal on the 1-hour chart tomorrow morning. As I mentioned on Discord to the community, a buy signal right here is nice. We have stochastic over 60 and we have gotten outside of a downward channel, also above a horizontal resistance, but we have this downward channel resistance, another downward channel right there. So we need to be cognizant of this. So if tomorrow morning we are opening higher than 245.68, that's the number you need to remember, 245.68. If we are opening right here, this is a buy signal with a very short target. The target is going to be just a couple of bucks above. But if we break both of them, then we are going to start talking. We have some other resistance at 260.39 and 273.79, and ultimately 291.97. These are the points that we could see Tesla cave in because it caved in at those points in the past. We have 273.79 right here. We have 284.24 right here, which I did not mention, and we have 291.77 right here. After that, we are scot-free for a while. So there's nothing that we can do tonight. We can just wait until tomorrow, watch, listen to the earnings call. This is going to be very interesting. Let's take a look at the rest of the market. So VIX is cooling down a little bit. We are down by almost 10%. If we take a look at the 1 hour chart, this is just going sideways. Yes, it is down, but we are still in this congestion zone. We are going sideways. This is just noise. Let's take a look at Dow Jones. So Dow Jones is propping up a little bit. We don't have stochastic over 60, so we don't believe it yet. So we are up 2.66% after 4 or 5 days of move down. SPX, we have been coming down also. We are up 2.5% outside of the very tiny bearish channel. So we are outside of it. So we are bouncing a little bit, but no stochastic over 60. So we don't believe what is happening right now in terms of a move up. We are still also inside the huge downward trend. So even if we go up to 54.65, then we could just cave into this. Nasdaq, the same thing, no stochastic, 2.63% up, still into the downward channel. And Russell, okay, Russell, this is different. Look at this one. It did not come down very far. Look at stochastic, almost above 60. And we are almost back into this double support. So we could have a little bit of a move back. It's only back into a previous downward trend. This is a downward trend. So we could be getting back into this. So this, we can consider this a buy signal, and we could be reaching the other side of the bearish channel at 21.48. Let's take a look at the market. Look at this. Wow, we see green pretty much everywhere with just a few exceptions. And we are going to get some numbers, durable goods orders on Thursday, and then that will be it for the rest of the week. Yeah, this is surprising. I thought that this would tank based on the numbers, but we'll see what is going to happen at the earnings call. What is going to be Elon's mood? What kind of guidance is he going to take into consideration? Is he going to have? And if we take a look at this, this has just been updated. Look at this. Reported 27 cents. The estimate was 41 cents. This is a 34% surprise. And in terms of revenues, a 9% negative surprise. So I am surprised that this is as high as it is post-market, but the real market is opening tomorrow at 9:30. So we are going to see what is going to happen. And this goes to show, if we open tomorrow at 2:48, it just goes to show that we need the tool called technical analysis, because it's very hard to make a direct correlation and even causation between financial information and ultimate stock price. We don't know yet what is going to happen tomorrow, but it has happened in the past that Tesla had bad earnings and then the stock just started to go super high, super fast. So yeah, it's not the retail investors that are moving the market. It's not people like you and me. It's the big institutions. And if they decide that 217.65 is low enough and they want to load up, this is going to push the price of Tesla up. It's just physics. If we have more buyers than sellers, the price is going to go up. So we don't rely on that fundamental data that we just heard in order to decide if we want to buy or not. We are looking at specific milestones in the tug of war between the buyers and sellers in order to make that decision. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.